There's a negative of $200 for cash. And then what else? Yes, liability. What is liability? What kind of liability is that? I'm sorry, so just notes payable, right? Notes payable. Uh-oh. By how much? 700 and positive or negative? Negative. It's an increase in your liability or decrease in your liability? It's increase. You have more debt, right? And what else is impacted? You have land, right? You have land now. You can use the land, and the land is your asset. So, I don't know if there's no property. Yes, it's property. Sorry about the mess. And what happened to your property? Increase or decrease? Increase, yes, because you can use the land now. By how much? 900. Do we see a balance here? What is the impact on your asset? What is total impact on your asset? There's an increase in $900 and there's a decrease in $200. What is your impact on asset? There's a total of increase is $700, right, for your asset. And what is the impact on your liability? There's also a 700 increase. So I think you have a similar homework question. It's asking you what is the impact on asset after this. So the impact is you have a 700 increase in asset, you have a 700 increase in liability, and that makes our accounting equation hold. Okay. The last one, prepaid loan plus $5 interest. Repaid the loan plus $5 interest. Let me see how that means. Oh, okay. So you repay the loan at one time, you paid it back, but you paid $5 interest as well. Okay. So let's look at that impact. What happened if you repay the loan? What happened to your liability in the first place? It decreases by how much? By 700, right? You no longer have this debt. So there's a decrease of 700 in your notes payable. And when we talk about T accounts later, on your T accounts for notes payable, there's a zero balance for your notes payable now, right? Originally it's a 700 and now we pay back. And then what about the $5? What is the $5? Interest expense, right? And where do we put interest expense? Shareholders' equity, right? Shareholders' equity, interest expense. And do we do a plus or minus? Think about it. Do we do a plus or minus $5? Think about what is the impact on shareholders' equity, not interest expense itself. If you pay $5 of interest, does that increase your shareholders' equity or decrease your shareholders' equity? What is that? Decrease. Do you agree it's decrease? Please raise your hand. Yeah, correct. It's a decrease because interest expense is an expense. Okay. Whenever an expense happens, it will decrease your shareholders' equity. So okay. Now, both your asset and shareholders' equity decreased. Do you know what is the amount should be here? Just look at the accounting equation. What is the amount you think will be put here? 705. Positive or negative? Negative, correct. Very good. It's a negative. And what is that account? Cash, yes, very good. You paid cash. Okay. So now you see, sometimes there's one transaction, but 3 accounts are related, just like our prior 2 examples. Okay. Alrighty, any questions? No? Okay, let's look at the next one. Identify which financial statements line item appear. Retained earnings. Where do we put the retained earnings? Shareholders' equity, which is B. What about inventory? What is that? No, just one. Balance sheet. Yeah, balance sheet. If you think of two or more, you probably think inventory and cost of goods sold are the same thing, but they're two different accounts. Okay. Sometimes they're the same, the change is the same, but they're two different accounts. Cost of goods sold. Correct. Sorry. Income statement. Which is payable? Very good. Balance sheet. Because I said everything that says payable, that is a liability, and the liability is on balance sheet. Which is expense? What is that? Usually we just say it's A. Okay. Oh, I'm sorry. Actually, this one is E. Retained earnings. Retained earnings are on two statements. Do you know which are those? One is shareholders' equity statement, and the other one is, what is that? Balance sheet. Very good. Balance sheet. So there, balance sheet. Okay. Fill in the missing amounts, A and D. Okay. So cash, inventory. So now we are doing the balance sheet. Okay. There's a lot of information here. I'll give you maybe 1 minute to look at it. Okay. We have 8 minutes, and let's see how much we can do. Okay, let's look at it. So the first, I think we should start with the income statement, and then look at year 1 and year 2. I think we can do the net income, because this is it's a concise way, simple way to do income statement. It just has two items, revenue and expense. So what is net income? How do you calculate net income? Yes, subtract one together. So will be equal sign, you click revenue, you minus expenses, and this is your net income. Okay. And then you do the same thing for year 2. And actually there's a simple way to do that. If you do same function for 2 cells, you put your mouse on the right bottom, and until there's a little black cross up here, and then you click your mouse and drag it to the left, and then you can have the same function for that one. Okay. And if you click the function, it's the same as C73 minus C74. Okay. Okay. And then next, there's a balance sheet here, and then we need to figure out the rest of those. It looks like I think last time some student asked me questions about this balance sheet looks confusing because there's no shareholders equity. But actually, like I said, shareholders equity has two proportions. One is stock and the other one is retained earnings. So the total of these two are shareholders equity. Okay. And then let's look at some information here. At December 31st, year one, the assets were 200,000 and liabilities were 150,000. And December 31st, year two, asset is 300,000 and liability is 200,000. And during a year, this firm has this amount of revenue and this amount of expense. No new stock was issued, and the dividends for the year will be equal to something. Okay. So let's look at. So here we want this. We want to record our year one here, and then we will squeeze out what happened in year two. So year one, asset, A stands for asset. Asset is 200,000. Yes. And then liabilities were 150. And then what is shareholders equity for year one? 50,000, correct. We can do a function, A minus L. Okay. You do the function, and the function will be appear here. And then we want to figure out what is the SE for the new year. So for SE, do you remember? If there's no stock issued, no stock change, then the change in shareholders' equity will be equal to the change in retained earnings. Does that make sense? No? Okay. So we want to know what is the change on SE. If there's no change in stock, then the change in SE will be determined by the change in retained earnings. Does that make sense? Yeah. The stock doesn't change. So let's figure out what is changed. Okay. How retained earnings changed, and then how do we do retained earnings change? Do you remember how to do retained earnings? Yeah, net income and dividends. Okay, let's first see how net income changed. But in this question, we don't have net income, but we can figure out what is net income, right? And we can start from revenue, right? And we have expenses, and revenue minus expenses will be net income. And then we can also see what dividend changed, and then we can see what stock changed, and then we will know the retained earnings for the new year, right? Okay, so what is the revenue here? 200,000, right? Expenses? Yes. And then dividends? We don't know. We don't know. But we know, okay, let's go back and figure out. So the new year's asset is 300,000, right? It says year two asset 300,000. And what is the new year's liability? 200,000. And what is the new year's SE? Assets minus liabilities. And this is new year's SE, right? And then stock has a zero change. And what is the change in dividends here? So this is the question. We need to answer the question here. What is dividend? If say we have dividends, then how can we squeeze out the shareholders' equity for the new year? What is that? We use shareholders' equity year one. What do? We do a plus net income, and we do a minus dividends. And by the way, you cannot type plus or equal sign directly in Excel cell. So click, I don't know what it's called, but click this label first and then use the equal sign plus or minus. Okay, and then this is SE year 2. Okay, so this is how you do SE year 2. And now you have SE year 1 is 50,000, and you have your net income. What is your net income? Revenue minus expense, right? And you have your SE year 2 is 100,000. And then what is dividend? Here is the question. What is dividend, right? Oh, we're about to do overtime, but if I'll give you maybe 1 minute to do that and put your answer on iClicker. Ten seconds. All right, let's see. Most of you got it right. Is 10,000, and then it's let me see. You can do actually a 50,000 plus revenue minus your expense, and then minus the next year's shareholders' equity, and that will give you $10,000. Okay, so that's it for today. We'll finish the rest of the problems on Wednesday, and then start our example on Wednesday. And be sure to submit your homework by 6 p.m. tomorrow. You have unlimited attempts.